Hi there, welcome to the new episode of Voice of Web3 podcast powered by CoinGape, where we speak with leaders and heavyweights in the finance, crypto, and Web3 industries. My name is Yali, and I'm sure you will be excited about today's episode because our guest is Henrik Zeeberg. You might know him as a top trader and analyst. He also co-founder of Glassnode and head macroeconomist at Swissblock. Nice to meet Henrik. What's up? We are very glad and proud to have you today.
Thank you very much for having me on. It's a pleasure.
Yeah, so before we start getting insights from you, I just want to give a second for those who are watching this podcast but still haven't subscribed to our channel. Please, time is now. Subscribe to Voice of Web3. Our guests always give you insight, share their experience, and of course, time. So today we discuss where the altcoin season is, when to buy the dip when it keeps dipping, and what to expect from Bitcoin, because you are not only a crypto person, you also have economy background. So I feel that you will share a lot for us. So let's start from your personality. I want to let our audience know about how you came where you are, how did you came to the industry, and about your roles at Swissblock and Glassnode.
So I'm in Swissblock actually. That's where I reside. So I'm the head macroeconomist at Swissblock, and so my journey is from, as you say, the macroeconomist from the University of Copenhagen. I have been working as a consultant for many years, but actually then transferred into the financial sector industry. Working as you can say a self-employed consultant, self-employed economist also, and had co-founded the Seeberg report that some may know of. And then I have been employed with Swissblock as head of macroeconomy, and that's what I do now, working with, you can say, trying to identify the trends of the market based on the business cycle, and also then trying to say where are the good opportunities in the market, both being in the crypto side and also other assets.
And how long you are in the industry?
So in the industry, if you speak of the crypto industry, you can say that's I maybe only been there for 2.5 years. So I'm probably not one of the newbies coming to the industry.
Yeah. Okay. So let's start discuss like the state of market right now. All media say about market is crashing. Why so? And you mentioned in your Twitter that it's not a crash for Bitcoin. Like, can you explain a bit more about this? Like, about this post, what do you mean? And if it's specifically about Bitcoin and for the market itself is a bit different.
So first of all, you never have a crash when everybody thinks there's going to be a crash. I mean, the thing is that when everybody anticipates something, then it's probably not going to happen. So that's one thing. Secondly, we need to have the sentiment where we need to have these episodes in a market rally where the sentiment is just crashing, or where it's just all the bullishness is getting flushed out. If we don't have that, then we will not see that the market can continue higher. So for now, I'm looking at the equity market also in the US, and you can see that they are actually pushing up against the all-time highs. You're seeing potentially a very big top in the dollar. Everybody has been so bullish on the dollar. We're seeing potentially a reversal there. I think we're going to see a very big decline in the dollar over the next coming weeks and months here, and then you have to have this very bad sentiment in the alts industry, or in the alt sector, where Bitcoin really hasn't broken down. I mean, we've seen it crossing up above 100,000. It touched 109,000 almost, and then came down again. But I was expecting that kind of decline down to around the 92,000 area, and then we should see it actually taking off from here into the final phase. And I think this is probably where most people will be most surprised to see that the what we see right now is not the top, but it's the beginning of the top, and that can also be bad enough. Because I think a lot of people will be expecting that Bitcoin will go on for years and years here, and I'm of the opinion that we are right now at the moment where we are seeing the first leg in the last move up in this bull market, and then we'll come to a very big top. And the next phase after that will be devastating. But for now, it will be, the music is still playing. Equities markets are good. Dixie is declining, and I think Bitcoin will reach around 125,000 before we get to any top.
Yeah, okay. So, yeah, we all see that Trump is bullish on Bitcoin, on crypto, even like his own meme coin, like pumping this meme coin. It means a lot for crypto industry. But on the other hand, we see like the geopolitical and economy situation, and it's a bit controversial because I'm not sure, I'm not like economy analyst and not a professional trader, but it's obviously like economy effect somehow on the market, and these two directions a bit controversial. So how do you feel like market will be in 2025? We don't speak about like other years because of course we know that Bitcoin is go on, but for this year, what to expect?
Yeah. Exactly. So you will always see that there are these fears that will reside in the market. So we can look back in time, and you will always see there can be conflicts around the world, and you can actually see through some of the largest military conflicts also, you'll have that you actually saw the stock market was still going up, and now we just say, okay, we have a larger one here, and I sympathize with Ukraine there a lot, obviously, but it's not something that is going to affect the markets here short term. And I think this is the right now you have the wall of worry that is what we see often, and people will say, okay, this is going to topple the market, and then you'll see that it goes in the other direction, and then people will say, oh, now the markets can conquer everything, and then it will actually get to the top. So I think it's not the geopolitical situation that is going to change the direction of the markets here. It will be more of what's happening in the real economy, and the real economy is about the consumer. It's about you and me, about our homes, if they devalue or if the prices of those start to decline. And if we have a job, then we will also be okay. But the moment we lose our job, it'll be a problem. So it's the housing market and the labor market for the consumer. And for as long as we can see that right now in the US, the housing market is not good. I mean, it's not like housing prices are declining fast here, but we're seeing that there is absolutely no activity in the housing market. There's no activity in the mortgage lending market. And this shows that the consumer right now is under pressure because of the high yields, high interest rates we have. So when that is going on, then we don't need that the economy then comes to a further stop, because right now the labor market is still okay. But the moment that stops, and I think that is coming to an end also, then you will see that the market will then start to pay notice to it. So it's not really the geopolitical things that ever puts in a market top. It is the big cycle of the economy. Mm-hmm. And honestly, sometimes we can see the markets can actually rally in doing what is geopolitically bad times. So it's the real economy, it's the consumer in the US that will be and the rest of the world, but it's much the US will be looking to that will decide whether we get a recession. And I think we're going to get a recession. And you asked me about 2025. I think we are in the early days here. We are in the early days here, not what I think, but we are in the early days of 25. And I think what we're going to see into the next few months here, maybe if you're lucky, will be a very strong rally. I think it's starting now in the US markets. I think next week and the weeks on from that will be great in the US markets, and we'll see 6,500 on the S&P and maybe even higher. And Bitcoin, as I said, 125,000, and people will be rejoicing, but it's going to be into a top because there are so many indicators that the economy is not well. I know the Fed has said that things are fine. I may be of another opinion there, and I think we're seeing a lot of structural damage to the economy that is not just something that will be, erased or washed away by a stock market that is rising. And rising stock market right now is also done on the backs of a lot of retail investors coming in really late to the party. And we can see that the majority of money coming in right now is retail investors. So
Yes.
it is what it is normally is. When this business cycle is reaching its final peak, the stock market peaks out, and investors are, retail investors thinking, okay, now all is fine, following what we see in the Fed and we hear from the Fed, and then they will get caught on the wrong side. But again, for now, I think things will be fine because people are actually bearish now. I think it'll be the moment when I ring the bell and say I think the top is here, then I think people will say, Henrik, you were wrong. You're just so wrong, and then things will be, as I see it, rolling over.
Okay, so is there any reason to check news, like crypto news or news about inflation, deflation, fast news, or employment data? Does this information can explain newcomers or any regular traders, investors, how to predict markets somehow? What's your indicators?
Sure. So the way I look at the market is that I look at the leading, coincident, and lagging indicators, and here people can go to what is called the conference board and take a look at those. The leading indicators are some of the macroeconomic indicators that tells us something about what is going to come, and there are something with the which is the yield spread, where you take the 10-year yields and you divide it by to subtract the 2-year yield, and sometimes you'll see that actually inverts. When that inverts, that is a signal for the economy that things are not great. It can then uninvert again at a certain point, which we are seeing right now, and that is actually the moment when things are starting to accelerate. So you will be the things people should be looking at is really the yields market. I think that's where the rates, the 2-year yields, and when the short-term yield starts to decline fast, that is a signal that the economy is not so good. We don't see that just yet, and that is an indicator that things are not really rolling over. So, but the market yields is one thing I will be looking out for, and also the initial claims in the U.S. And if you look at when does the businesses start to lay off people, that is the thing you need to look out for, and also if people can find a job again. So one thing is that businesses are not laying people off just yet. But another thing is those that are getting laid off, will they actually be able to find a job? And sometimes you can actually look at the initial, so the continuous jobless claims, which will give you an idea of, okay, people that come out of the workforce actually stay unemployed for longer. And also the duration of unemployment, how long are people on average unemployed? If that goes up, that is also a negative indicator for the economy. And right now we are seeing those things. We're not seeing layoffs in the businesses yet, but we are seeing that in the continuous claims are actually staying rather high, and actually looks like it could be moving higher. And you're seeing also that the average unemployment, the duration of that is rising. And that is not what you want to see into a strong economy. So these are indicators of things not being so fantastic, even though we hear that the economy is fantastic. So that is if you want to look at it on a week by week basis. But otherwise, it's about looking at the housing market and thinking, why is it that there are absolutely, the housing affordability in the US, nobody can afford their, what in the housing where they live at this point. It's a very easy thing to go and check. We have to go back to the 1980s to find levels that are as low as we have today. You can look at the mortgage application markets to see how many mortgage applications we're getting. The fewer people selling and buying new houses, the less activity there is in the housing market. And these numbers are now at, rock bottom levels. So if we now on top of that gets a situation where unemployment can start to rise, then you have a very, very big bad situation coming. And I think that is what you need to. So the yields market, the initial claims, and then the more structural damage is what has been done in the housing market. That's how I look at things.
Yeah, and as we mentioned, layoffs and the recent events in Davos, all of those governments talks about AI change humanity somehow, and it can affect layoffs maybe. I don't know, what do you think? Is it like everything is going digitalization, and do you think it can affect the economy in the future?
Absolutely. And it's like every time we have a major leap in technology, you will always see that there will be some businesses and industries getting hit. So when the automobile, the car came out, 100 years ago, you would see that the market for saddles, horses probably have been declining at that point. That's at least what I would think it did. So you will see that there are these shifts in the economy every time in businesses and industries when new technology is being introduced. Obviously, AI is going to be a major driver of growth around the world, because you will see that we can become so extremely productive. I mean, I can probably right now, and I've done some work also here with legal work, where I can simply use some of my own time and focus on trying to come up with the best kind of, is it a contract or whatever I need to do, and then send it off to my lawyer. And instead of having him doing 5 hours of work, he will only have to do half an hour to actually go through things, to see if I got it all, and maybe do the small amendments and changes. So I think, yes, we are seeing a change in the how we are organized, how technology is going to assist us, and it'll make it mean a very big step and shift and leap for us, for humanity. In the short time frame, we will have a lot of people who will need to start to think, how do we actually get to do this? How can we work with this? And there'll be a lot of businesses that will try to, maybe are not as innovative, or maybe not so front or visionary, and they will not maybe introduce this to their businesses, and they will go bankrupt, and then you'll have new businesses arising. So that every time you see technology shift like this, you will have a shake-up of the entire workforce and the entire industry, whatever kind of industry it will be. And until that phase, that will create a lot of volatility within that industry. So yes, there will be people that'll be laid off, that will not be able to adapt to this, and there will be people that will thrive with this, because they will come in and actually say, wow, I can actually, we can do all this. And we need to be able to understand that the future will be about AI, and obviously we need to contain AI. I'm not an expert here, but I understand that there are many dangers with it as well, and we need to contain it in the right manner. But using the force of that, exploiting that force of AI, I see as an extreme driver of productivity, and I see it as the fourth industrial revolution, which will have a lot of casualties in terms of people falling out and not being ready to go through whatever it is. I mean, I'm turning 50 next month, and I could be one of those that, wow, if I couldn't cope with this in the old days, I would get laid off from whatever work I was doing. So it's about people adopting it and adapting it to AI, and that, I think, can be a difficult phase. Some businesses will go bankrupt, some will be able to lay off people, and others will be hiring in people. It will be about new skills, upskilling people to utilize and exploit the possibilities of AI. So it will not save the economy at the short time frame. It will not destroy the economy I don't see that as that. I think it's something that on a longer time frame, not even a medium term, but a longer time frame, will just explode our capabilities and our efficiency and productivity as people, as mankind. And I think it's a first somewhat scary time, but also extremely thrilling to see what we can make out of it.
Yeah, it's a big opportunity for future framework. Yes, and back into the crypto. As I promised to our audience, to give a clearness about buying the dip, because there are like all Twitter, I think, literally with these memes about buying the dip, and when you buy the dip, it keeps dipping. So how do you think? Can we buy the dip at the moment?
I can't tell people what they can do or cannot do. I mean, I think it's important that people understand that when you're working, or when you're, I won't even say investing in many alts, because a lot of alts, especially the memes, they are per definition speculation. It's speculation, and you cannot you cannot win. I mean, you can potentially, one person can maybe be able to win, but in the larger spectrum, there will be people that are losing because there's no value creation in the meme. So when you have all these alts out there, there will be a lot of losers in those, and especially if I'm right on that we're going to get a recession, I think you're going to see the alts actually getting completely destroyed. But is that now? I don't think it's now. And actually, if I look into 2021 and see the structure we had into the top of that, the alt season actually came into the final move of Bitcoin. And I see that we have a very, very similar situation to what we saw there. So, and actually also with the same kind of timeline of developing. So I think there is a lot of good opportunities out there right now. That's how I see it myself. I've been, adding to my portfolio over the last couple of weeks here, because I think, buying the dip, yes, but also understanding and something about the technical setup, and I think Bitcoin is pushing higher from here. We need to take out 100,000. Then I think chances are good that we are going towards 117,000, then a bigger decline again, and then up towards the 125,000, and that kind of market will be very, very good for altcoins and memes. So I'm not going to recommend anything to anybody, but I can tell that I'm not too worried about what we see right now.
So it's about altcoin season as well for Bitcoin, like for both of these directions.
It's not just Bitcoin. I mean, Bitcoin is the driver of things, has been the one that is attracting capital to it, and when the capital then starts to rotate into other alts and so on, that's when we start things to really to go. And if people really think about it, you can look at a coin like altcoin like Sui. I think it was up 110 times since I think it was August of last year, up to the high in December, and then it's down. I can't remember what the level is, but a lot. And people saying, we kind of expect 10 times, but we don't expect 40% down. I mean, that's ridiculous. So when something goes up 10 times, you probably think that it can go down quite a lot. And obviously, if you buy it right at the top of around the 10 times and it goes down 40%, you're gonna, seem like you're losing money. The question is not whether you are in the red there. The question is whether, of course, it's not good, and the proper risk management could solve that. But if you are looking at the longer time frame, and you actually see that this can actually move much, much higher. So things that goes up 10 times will also decline and come down in a correction. And I think that's the kind of correction we have seen now. And I think Bitcoin will drive it now. Again, it needs to drive it the first phase here, the next, let's say, 3 weeks. And then I think the altcoins will start to pick up. And by the end of it, actually, we need, if you look to 21, everybody go in, check it. In 21, you actually had the best part of the alt cycle after Bitcoin topped out. So you need Bitcoin to top out, start the decline, which I think it will become soon, sooner than most people think. And then you will see that Ethereum and altcoins and others and memes will actually do best at that time frame. And I think we're going to see a replay of that. So for now, I'm looking for Bitcoin going above the 100,000. Next few weeks here, pulling the rest of the market slowly higher, and then I think the altcoins will start to see the capital rotating into them.
Yeah, thank you. And I think it's important to discuss risk management. So could you advise or just tell us, what's your rule you're keeping to risk management?
Sure. I mean, they're both short and longer time frames there, and there are some parts of my portfolio I will accept that has a lot stronger pullback than I will for other parts of it. There is a strategic part that I will not accept too much of a pullback on, but on a more tactical level, yes, I can accept that. And there I simply say, well, if we look at it in the bigger picture, are we then in something which is a collapse, or are we in something which is a healthy decline or healthy consolidation? And 40, 50, 60% can feel like more than just a healthy consolidation. But actually in crypto, when you go up 10 times, it is not so weird to see that it's actually declining quite a lot as well. And that's what crypto will be. So in that, I accept bigger drawdowns on my tactical part for crypto than I do for some of the more strategic part. So that's how I work with that. And there are some certain more technical levels that I'm trying to adhere to, but pretty much I also have a tactical part that I just have kept throughout the whole shebang here. When we have the decline, some of those are underwater, and I will just be building to it, and others are still above, and I will hope that we see what I think we're going to see over the next 2 months here. Then all of that will be quite fine. So yeah, it's I'm not anticipating and expecting to be above water all the time. I'm anticipating that if I get the trend right, I will eventually come out on top. That is my normal tactic to this, and then also accepting on certain part on the more tactical level of my portfolio that things are pulling back, especially when it comes to crypto, because it is. I mean, if you don't like a bull ride, you don't jump in on a bull's back in a bull arena, bull riding arena. You stay off that arena. So if you don't like volatility, crypto is not for you.
Yeah, and when we talk with Ron Neuner, Lark, it's also like top influencers, they told that the main mistake of like traders and investors in like the whole cycle, that they invest, but when there is a bull run, they sell it too early. So maybe you can share something how to understand that your profit is enough. And it's risky to wait for more X.
So first of all, those that know of my call from 22 was where I said I think we're going to around 6,000 in the stock market, and I did that based on some Fibonacci levels that I follow. I then as we go along, I then do some calibration of that. So to me, there is a lot about what we see in terms of reaching certain Fibonacci levels in the market. And also what I do is I go across all markets. That means I go across commodities and bonds and equities and everything crypto. And I see it all in a big, with the dollar right in the middle of it, as a big puzzle that needs to be in line. And that means that I cannot just look at one thing. I don't just look at one market and say, okay, now I reach a certain line and I've done enough, I pull out. I actually look at it and say, well, I think based on what we see that we have a continuation here of the market conditions. As I said before, equities looks good right now. On the US, we have the dollar potentially declining now, and we don't have an economy that is rolling over because we don't have the initial claims moving up. Why would I be so bearish the market at this point? And that's I'm not. I'm actually very, very bullish, and I'm anticipating it to go much higher. And that's where I then have the Fibonacci levels that I need. When I reach them, and then I'll start to do candle analysis, looking at it and saying, what am I seeing on a daily basis? Are we all of a sudden seeing a big sell-off? And you actually, if you look at these indicators, there are a lot of great indicators that can be used to say, are we getting closer to a top? One of the things that I'm using a lot is momentum analysis. Momentum analysis is something that is widely misunderstood as I see it. People are talking about RSI overbought and oversold. It's actually a very wrong way of using RSI. I see it as a strength indicator. So if you are an 80s level, well, it may be that it's a part of the top, but that's actually where things are moving the fastest in the positive direction. So you may want to get out at some point and you may see the top, but you often will see that the decline in the momentum starts before you see the decline in prices. So you can look at what is divergence that I use a lot, both positive and negative divergence, which will tell you, okay, we now seem to be getting closer to our top. And the more you dive into that, that is actually a gold mine to discover that momentum is telling us so much. So right now in the S&P, I'm wildly bullish because I think we're going to get, Fibonacci wise and momentum wise, I can see there's more upside. But I can also see that the deterioration in the stock market has been deteriorating for the last year and a half in terms of strength. And that is what I'm also looking at. So I'm looking at these many factors here in terms of it. It's not about when is it enough for me. It's about when is it, the market is telling me by undeniable facts that we are now seeing the most probably that we have reached the top or something, close to that.
Yeah, the question was about Ripple and XRP because it's a bit controversial as well. From technology perspective, it's a good project, and we see a lot of announcement now in the US regarding Ripple, and and also we can see that XRP is a bit speculative coin. So what do you think? Do you believe in this in XRP, and how you see like the future of Ripple? Because it's obviously that it's innovative of for transaction.
Yeah, so I don't honestly know enough about the technology with behind XRP. I have to say that I'm looking at the charts. I'm looking at whether these things are good investment. But I can see what people are saying, that this may have a bigger role in the future. Again, I think that can be some of the talks that you can have behind any kind of strong development that you see in any kind of crypto, and we've seen how XRP have done fantastic. So, but I'm the wrong person to actually ask about the technology behind it, whether that can actually play out to be something. I wouldn't have any real insights on that.
Mm-hmm. Yes, and back into US, do you believe, or like what's your take on the US wants to have Bitcoin as a reserve?
I think it sounds a little exotic. Let's say, put it like that. I don't think that Bitcoin is a thing for a strategic reserve in any country. I think I know people would like to see Bitcoin as something of digital gold, but that's not how I perceive it just yet. I think we have been living in a world where yields have been so low, interest rates have been so low, and it's been driving a bubble in terms of anything can go, because yields, when you look at the capital demands or the demands of return for any kind of investment, you would actually see that anything could go. So I don't know if Bitcoin is going to be a big thing in the future. I know people think it is, and right now nobody can actually speak against it. So we'll have to let time show whether Bitcoin really is something there. I think still you see that central banks are still buying gold right now to bolster their the balance sheet with precious metals or with gold, and I think that is probably still the right thing to do. So I'm not so much in the camp of actually looking at Bitcoin as something of a necessity in a strategic reserve as the US. But again, we will need to see whether Bitcoin is something of how it performs also, because you can have a strategic reserve or a component of that which just jumps up and down like to 20, 30, 40%. That is probably not what you want to have in a strategic reserve. So Bitcoin needs to show a little more stability over the next many years, and we haven't seen that just now.
Yeah, and if we speak about it's more trader things about indicators. I mean the how it called? It's a program for with indicators, and there are many opportunities for traders as copy trading, AI trading. How do you think, is it good things for newcomers to start understand how the graphic works and etc.?
I think there are like in all investments, there are two ways of approaching things. I mean, there is a Warren Buffett way of understanding the real foundation of things, and understanding that this is something that has a long-term future, and then based on that, saying I'm going to buy in, and then I'm going to keep it. And I'm going to build that for the future, because I know it will have it will secure wealth for many years ahead. And then it will be the other part where it will be more like people going in and saying, okay, I can see some kind of upside, whether it's technical or whatever it's going to be that is driving that kind of insight, and then you're in it for a shorter time frame. So I can't say which one is best. It's some people will do really well on the second part, and others will do well on the first part. What I do see is that I think it's very difficult for traders here to investors to really understand the full complexity of all of this right now. I think there are so many projects out there, and I'm sure there'll be 10 of them that all out of these, the hundreds of thousands that you have, that will become of something. That will be the next Amazon, the next whatever it's going to be, is out there somewhere. I'm not good enough to identify those just yet. I think we need a serious crisis, which we haven't had yet. I know people think we have, but we need a really serious crisis in the whole crypto industry and in the world for the flushing out of all the things that cannot live. And then you'll start to see those that are still around will probably be some of those that can be standing for the longer time frame. I think again, in 5 years, you will see that 99% of all the products out there and the coins have evaporated. That's how I see it. I see it as a major bubble that always arises. And if anybody new comes into this industry, they will have to, in my world, they will have to look at it like that and say, I need to understand that this is maybe the hype. A lot of people are talking about this, but it's also a hype where the coins are generating zero in yields. They are not producing any surplus every year, and it's difficult to understand how that can go on, especially if interest rates are going to stay up at the 5-6% level. Then you will start as investors think, why would I want to hold something here for speculative purposes? And speculations like this can consist for some time, but they will not be there they cannot be sustained forever. So we have to get the right ones to come out, to stand up the moment when we see a crisis. And those ones I think can do fantastic over the next 10, 20 years. But I'm not good enough to identify those yet. I think the day where we have a major crisis 2 years down the road, I think the ones that are really the right ones to invest in will be, for a longer time frame, will be standing out.
Mm-hmm. And you always speak about the picture, helicopter view. And do you see any difference between this cycle and the previous one? Or always
yes,
the same?
I understand it. Yeah, it's not always the same, but there are many of the drivers that are the same, and I think actually what we look at right now, it seems more like the cycle that we had in 2016-17 into that top than it does into the 21. I know people say, yeah, but Henrik, the top was 22, but actually in terms of where I look at it, 22 was a correction, but I don't want to get into that now. But I think I think that there will always be a slight shift in the narrative of things, because obviously you don't just adopt the next, the narrative from last time, because you kind of failed on that. So there will be a new kind of narrative that will be winning, and I think, but in structures, in terms of how things are developing, I think it'll be pretty much the same, because we are human beings, all of us. We are looking at, we become over optimistic, over pessimistic, and then we go through those phases. And when we act, even though we think we do it independently, we actually become lemmings. We become part of a larger dynamics, which some will be standing out a bit, but in the greater part of the group there, everybody will be working along, or will be kind of following the dynamics of a crowd. And so I think it's difficult to come into this industry here and then figure out which are the good projects here, and it's not just about following the crowd.
Yeah, I got you. Thank you a lot for this. And to make a conclusion, what is the market for 2025? What to expect from it?
What to expect? Okay, let's see if we can get it right. Let's give it. I think sitting here on, what is it today? February 21st, that we will get a very big market top in Bitcoin around mid of April. And then I think you're going to get a very big market top in altcoins around a month later, so in mid of May. And then you'll start to see the decline. Bitcoin will top out first, and you'll see a decline, and you'll see the altcoins following after. And I think the last part of 25 obviously, will be bad, will be very bad for altcoins. So I think there will be a time here into mid of this year now that we will see things can develop. And the first sign will be actually the decoupling of Bitcoin and the altcoins, where the altcoins will just go skyrocketing, and Bitcoin may even be flat or moving a bit down. That is the time when I think we could start to see we're getting really close to the end. So time-wise, for now, maybe adjusted. Again, for me, it's more about the levels than it is about when. So staying with the market for as long as we get to my FIB levels. But 125,000 for Bitcoin, and then I think the altcoins market can reach, I don't know, insane value, level of value. So, but it'll be into the, let's say, into the first half of this year. Second half will be bad.
Yeah, thank you for insightful discussion. And I want to also ask you about your goal or your plan for this year, like professional goal.
Sure. Well, we are building up what we call the Swissblock Economics and Markets, where which I'm heading together with a great team, and we are where we help our professional customers also with understanding what is going on in the market. We're actually tying up the markets, the economy with the markets, and trying to understand how can the economy actually help us predict what is going on in the markets, and not just by jumping back and forth on various economic indicators. So we're building that out, and that is we have great success with it now, and we want to see more people and more customers coming in and become a voice in the crowd of macro economic experts, that has a view on the markets. So that's what we want to be.
Yeah, and last two questions. The first one is, what motivates you more to do what you do? And we also need some piece of advice to our audience.
Sure. So what motivates me is that when you hear something, I mean, I love to be the boy in the Emperor's New Clothes. I mean, I'm from the country of Hans Christian Andersen and the Emperor's New Clothes, and you have all these wise guys standing out there and saying, "Oh, look at these fantastic clothes that the Emperor is wearing," and I'm here referring to all the macro experts and the economic experts that you see on medias and in the Fed. And I like to be the one that is actually just asking the question and saying, well, what is it that I don't see and understand? Since I can come up with a different conclusion. So that drives me on a daily basis to keep asking questions, not just being content with what I know, but actually asking. So I ask myself, 10 new questions every day on what is it that I don't get? How can I, solidify, or how can I challenge my theses? And that's what I do. That keeps me driving. I love that, challenging my own theses and understanding other areas of the market. And advice for listeners, viewers, I think it's about doing exactly that. I mean, it's about looking. It's about not just accepting what you hear and see from the macroeconomic experts. It's really about doing your own due diligence, asking the questions every day. And if you come up with another answer than what everybody else is, then you may not be wrong, because you actually see that the majority of people are very often wrong on market terms, and we have seen the Fed being wrong over and over and over in terms of when the recession comes. So do the due diligence. I mean, get into the numbers, get into the charts, and then you will see that things are see the things for yourself. And if there's something you don't understand, maybe it's because you're right.
Yeah, thank you so much. We are really grateful for your time, for your discussion, for your opinion. It's really important for us, and we always have a really cool guest, and I'm excited to have you today. So thank you one more time. Guys who are watching this podcast, please like beforehand, or if you in the end of the podcast, you should like this video. See you. We are really glad to have you one more time. So again, if you have any announcement or have something to tell to the crypto audience, please, you're welcome.
Absolutely, I will do. So looking forward to in the future to coming on again.